afternoon, everyone, and welcome to another edition of Beyond the Bell. It is Tuesday. It is April 16th, 2024. It is 60 seconds after the bell, which means it's time to go beyond the charts. Beyond the news and beyond the bell, brought to you by our good friends over at the Blue Sky Trading Company for the clearest path to a live brokerage account. Live trading with Mike every day in the Discord, and this outstanding show. You have no reason to get your content, get your accounts, get your brokerage accounts anywhere else. Check us out at bluesky.pro. Boy, first of all, man, love to see the bells in the chat. Chris, TCGX, say that 10 times fast. Tyler, Mike, Drawdown, great to see all of you. Hope, great to see everybody. The gang is all here. It's the usual suspects today, and couldn't love y'all more. So thank you for tuning in for another edition of Beyond the Bell. So guys, we're going to get right into it. We're going to talk about the big picture today, and we are going to specifically look at this. I think we talk about what are the, we've had a lot of names for the NQ on this show. I think Monkey on Meth is probably my favorite. Boy, what a just interesting day in the NQ today. Although, when you look at it in the context of everything, it makes perfect sense, right? We talked about yesterday, huge decline yesterday as the markets began to process the news from the Middle East. And clearly today, the markets are just not overly impressed. I want to talk very quickly here, guys. So I want to label two things for you. I'm going to put two lines on this chart. Okay. This is our 8:30 Central, 9:30 Eastern. So right about here, that blue line is our open. And I know we've got some action, or our New York open. We've got some action coming on over here. But guys, this line, we'll make that red, is our close, our 4 p.m. Eastern close. It's futures. We still trade for a little while, so we reset for the day. But guys, look at all this price action. Look at our open. Look at our close. Okay? This is the very definition of driving a long distance and not going anywhere, right? I remember a few months back in the fall, I was driving around. I had some errands to run, had a doctor's appointment, all that. And I basically made, now I stopped at places, right? There were destinations along the way, but I basically made about a 60-mile loop, right? Basically a big square. I drove up to a major highway, went to where I was going, then I had to go south on a different highway, then I had to go east back to where I was, right? So I remember thinking, boy, I drove a lot today to end up back at the exact same place that I started. And the markets were just like that today, guys. We ended up basically, right, we opened, actually it'll tell, well, I don't know if that open and close. We opened at about 17,867 and closed just about 8 points above that, right? So look at all this price action. Now, here's something I told you guys, I teased in the Discord, that there's a small little simple hack that I sometimes use to determine how tradable the markets are. Now, if you're kind of, if you're a little more of a quicker pace trader, a little more of a scalper, playing for 10 to 12 points here or there, and you have a good system, you probably did okay today. The market was quick. The market was violent. The market moved up. The market moved down. But again, we just ended up basically right back where we started. So I want to talk about, okay, we're going to look just briefly at the close here. You guys have heard me talk about the ATR. Average true range. Basically, how big's the average candle? So right now, we'll round up. The ATR is at 32. Up here is a little tool, and this is a small part of a paid set of tools I have. So, but the dev width, okay? So the dev width is looking at the standard deviation width between VWAP plus 1 standard deviation, plus 1 standard deviation 2, etc., etc. So the dev width are these areas in here. They're all the same, right? So the dev width, in this case, we round up again, 27. Okay? When the ATR is above 27, or is above the dev width, and it was almost all day today. In fact, you go back here, the ATR was almost 40, and the dev width was actually a little smaller than this. I think it was about 25. Okay? That, to me, is completely indicative of what happened today. That shows me that, again, so the ATR is about the average size of the candle. without getting too deep in the weeds on that. The dev width, for those, especially for those that are familiar with statistics and probabilities, and guys, honestly, if you're in trading, you don't need a PhD in statistics and probability, but having some baseline knowledge is very important. If for nothing else, get on Investopedia.com, look up standard deviation, look up the bell curve, basic probabilities. This is the type of stuff that can really help your trading, even though it doesn't seem like it, right? And so when this dev width, so basically the standard deviation, about 67% of the price action is going to happen between +1 standard deviation and -1 standard deviation, okay, approximately. So when those two together are basically 50, and the ATR at times was 40, sure, the ATR is bigger than those two combined, but that tells you you're going to get chopped out of a lot more trades. Your trades are not going to have the room to move in the direction necessarily that you want them to. I don't know if I'm explaining that perfectly right. And honestly, guys, we could do a deep dive on ATR. We could do a deep dive on dev width. But just keep this in mind in the future. And you don't need this fancy table up here to tell you what the dev width is, right? At any given moment during the day, especially in a nice program here like TradingView, you can just do some basic math what the dev width is at any given point, right? Here, let me get rid of these tolerance bands so it looks a little cleaner, right? So here's VWAP, and here's +1 standard deviation. So, and you don't even need an exact number, guys. You can approximate the distance here. And if that is and again, whatever time frame you're using, if that is bigger than your ATR in this chart, so it's 5 minutes, you're going to get chopped out of a lot of trades, right? And sure enough, let's look at this, guys. I know some of you watching this on a phone, whatever, may not necessarily be able to see, but let's just look at a couple of key areas, and let's just start marking the tails here. Okay, when you see multiple wicks, shadows, tails, however you want to talk about it, going in different directions, back to back, what is that? Again, we've talked about that, especially here. Look at this crazy thing. I think Powell was flapping his gums during this time. So multiple candle wicks, buying and selling wicks, long, short, all over the place, not respecting VWAP, bouncing over VWAP, not respecting standard deviation. This, to me, is a whole hunk of garbage, to be perfectly honest. Had a couple of small trades today. I think I finished +350 on the day or something. It was basically one of those days that if I had stuck with it, would have been a whole lot of work for not a whole lot of money, right? Of course, none of us like losing money, right? But one of the most frustrating things to me is not losing money. I've been at this long enough. I know that if I lose some money, I'll probably get it back fairly quickly, even if I'm not seeking out revenge trading. But what frustrates me, guys, is to spend like 6 hours trading for like $100, right? That, and seeking out trades, doing all this, so just a really weird day. And again, there is movement. It's so deceptive to look at this 5-minute chart and say, well, there were tons of opportunities today. Well, keep in mind, market movement and market opportunities are two very different things. Now, often they're intertwined. Often they're like this. When you get good movement, you get good opportunities, but not always. And today is one of those days that, again, if you had a very specific trading setup that's, again, you guys, I haven't done my scalper rant for a while, and you guys don't need to hear that because it always ends up pissing at least somebody off. But I'm a firm believer in scalping is really, really difficult in general, let alone for beginning traders, right? Like, it's so tempting to go like, especially in an eval account, like I can trade 5 minis, therefore I should, right? And I'm gonna get these 5 minis, and I'm gonna just try and take like 4 points off the NQ, make a quick few $100, right? And then ultimately it just enough of them go against you that again, you work all day, and at the end of the day you're up $50, right? And commissions have just chewed you alive at that point. But for momentum intraday traders like myself, very, very difficult day to trade. Now, again, part of this is experience and recognizing that. Especially after this little, Shirley things got a lot more crazy. Of course they got crazy, and stop calling me Shirley. But after this particular little group here, I remember saying to myself, man, is this going to be one of those days? And again, it sure enough was. So Yeah, goes up 3 points and tanks 20 points. Again, guys, this is an interactive show. If you have any questions or comments, throw them in the chat, and I will be happy to acknowledge. Before we look at the 4 hour, let me catch up here. Philip, good question. Would you say the movement of securities is more of a log transformed curve than a traditional bell curve? So, Philip, I want to get into a little the log curve. I'm not as familiar with as I am the bell curve because, with standard deviations, I'm talking more, sort of basic probabilities and statistics. And I don't want to turn this new into some sort of calculus class. But at the same time, so movement of this. So securities, if you're talking about stocks versus options versus futures, they're all sort of interrelated. But Philip, I am absolutely not as familiar with the log transformed curve as I am the bell curve. So I don't want to wade into that and end up sounding even stupider than I typically do when I'm talking about things that I don't understand. Okay. NQ equals far too many wicks. Yeah. Dragon says, will there be an update in Discord soon? You're going to have to elaborate on that, Dragon. I don't know specifically what you're talking about. Mike, I made 14.29 today's count. See, there's always one. No, actually, Mike, let me just say this. If you had a defined setup and today was a day that the setup just worked well, then I congratulate you. And I say keep it up. Right? But any system, even the systems that I trade, one day does not a system make. So if you have a valid system, you've tested it, does it work on days like yesterday? Does it work on days like 2-3 weeks ago when the market wasn't moving very much? Again, if you were just buying because you thought it was going to go up or selling because you think it's going to go down, that's going to catch up with you. But if you had a defined system that has been tested and you continue to do well in it and, 2, 3, 4, 5 months from now, you're coming back here and saying, hey, I'm still doing $1,000 a day, then I will be the first one to congratulate you because that's outstanding. I have things that I've worked with. I've had one-on-ones with probably over 350 traders over the years. In fact, I've got one coming up a little while after this show. I've done group chats in front of thousands of people in virtual rooms, in front of hundreds of people live and in person. I've run, live trading rooms, shows like this, on and off. I love working with newer traders, specifically traders in their first 2 to 3 years who have yet to see any consistent profitability. The number of those people that can design and put together a scalping system and make consistent profitability or profits on it over longer periods of time is tough. There's just not a lot of them. Again, Mike, that's not to say you can't do it, and I wish you all the best. And if you need any help with it, reach out. But just, be careful. That's all I got. Made 1.6 last night. Reginaldo, congratulations. Yeah, drawdown. There was movement. If you're somebody whose system just relies on a little volatility and movement, that's great. Most of my systems need movement, but also need strong directional movement. Okay. And it doesn't even mean trend versus non-trending days, right? Versus flat days or chop days, however you want to say. I just need good intraday momentum, clean signals, and today just wasn't it, right? So, absolutely. Oh, Dragon, that's just stay in my Discord, and everything starts next week on all that. But don't worry about that right now. That's not part of this show. Took me years to put it together. Oh, hey, Mike. Okay, then there you go. So if you got a clean system, a lot of time and effort put into it, man, I'm rooting for you. Keep getting it, right? Oh, okay. Well, there you go. So absolutely. So that's a very reasonable profit amount in an account that size. So your risk reward's probably, again, in line very well. So kudos to you. Congratulations. Wish you the best. Keep coming back. All right. Trading the edges of a range day is a great way to make a massive amount of money if you don't let yourself try to catch breakout beyond the range. First of all, Zach, you're not wrong, right? There are whole trading systems based around like centering parts of the day, like VWAP, like point of control is another one if you're a market profile or a TPO type person. Guys, any system that makes you money consistently, and I mean most days over the course of many months to a couple of years, there's no wrong way to do all that. The best explanation of the markets. Oh, sorry, somebody doesn't know not to call me here. The best explanation of making money in the markets I ever heard, guys, was that there's a million ways to make money in the markets. They're all just hard to find, right? So definitely something to kind of keep an eye on. All right. Just a second here, guys. Let me pull up. All right. So any before we move on to the 4-hour chart, guys, any questions? Questions, comments, concerns. Okay, so let's move on to the 4-hour chart. And guys, this is about as I've taken a lot of things off a lot of the zones off the chart, right? Because I clean it out about every 3 or 4 weeks. I clean out the zones on my 4-hour chart. You see, there used to be a lot of boxes here, just because again, when we go back to, we haven't been in this particular zone since back here. What is this? Late February to early March. So we're talking, it's been over a month. That doesn't mean I won't pay attention to this area. In fact, we can put a nice little box here. That's not my... So again, we are, previous support. We're checking back into this next level of support, guys, is not down here until about 17,500, right? Not a lot going on in here in any way we're talking about at least a few months ago. So if we break out cleanly below 17,800, 17,500 is on deck to me. Now, your guess is as good as mine. And guys, that's all we really do. Our thesis in the markets are educated guesses, right? And as I've said many times before, a trade is where a thesis meets a setup. So at any given time, I'm going to have a bull thesis, a bear thesis, or a neutral thesis, right? Or more of a wait and see as it is. So right now I'm in wait and see mode. I do think if we break below, personally, what would I like to see? I'd like to see us go test this 17,500 level, okay? And I actually do think that that's what's going to happen in the coming days, because once we get down here, if we break below that, we've got room to 17,000. If we stabilize here, we've got room all the way back up to 18,000. Okay. In fact, this right here is my right now educated guess of what's going to happen over the coming sessions. It may take us 3 sessions, may take us 10. Okay. But that's just one thesis at any given moment. If we break down below here, I will have a bearish thesis. If we break out above and hold above 950 up towards 18,000, I will have a bullish thesis up to this point. Okay. Now, do I only take trades according to my macro thesis? Not necessarily, but I'm definitely going to be seeking out certain trades based on what my overall thesis is. And that thesis can take what maybe I consider a B trade up to an A- trade, right? I talk about my grading system quite a bit to some of my clients, and it's a little, it's a little subjective, but it's still something that I've used for many years. But again, if we zoom in here, guys, again, candle wicks, shadows. I should just pick one word and stick with these, right? This is all over the place, guys. Really? So this is, it's what half the day I'm looking at the charts like, really? That's what you want to do right now? So again, this is a lot of chaos, guys. And you know what? That's okay. The market we are now, despite the fact we are bouncing around, guys, the price action is contracting, right? Let me pull myself back up on the screen here. Oh, sorry, I got to get rid of that. Clean that out here. Okay, guys, keep in mind one of the only guarantee in the markets. The only guarantee in the markets is that price action expansion leads to price action contraction, which leads to price action expansion. That is 100% true in the markets. Always has been, always will be. Price action contraction will always lead to expansion and vice versa. Now, sorry, completely lost my train of thought there. We're not even to Thursday yet, which is usually when my brain just takes a crap at about 4 o'clock on Thursday. But it does not. Now, where we as traders have to figure that out is when, right? Because in theory, I wouldn't say this in practice, But in theory, we could be in this zone indefinitely. We could be in this zone for the next 10 years. Now, am I willing to put money on that? Hell no. Right? But we could be in a consolidation period for 10 candles, these 4-hour candles. So we're talking a couple of days at that point, 20 candles, 30 candles, right? But it is, again, go back and look on the chart. It is an completely infallible rule of the market. Price action contraction to price action expansion. Price action contraction, price action expansion, right? And this expanded quite a bit and bounced around quite a bit. Now we're contracting a little bit. Okay? So that's basically, I'm sorry, I didn't have that up on the chart right there. But regardless, you can take my word for it. All right, guys, let's get to the mailbag. And any questions that you have, we will talk about. How is your trade plan? Van, I'm going to need a little more information in terms of your question. Yes, I do have a plan for every trade. And I have to follow my trading plan. Now, I have a playbook, like for every trade, right? So I know exactly what every trade is. So I have a trade. For example, one of my trades called the RTT long. Okay, so when I'm trading the RTT long and I see it on a chart, it's a Renko-based trade, right? And I know that's an RTT long. So when I take that trade, I know initially where I'm going to put my stop loss, where I'm going to put my half profit target or third profit target, right? And I'm going to operate under the rules of that particular playbook. Okay, if I'm trading a VWAP tap short, I know, what my profit target, what my stop loss are going to be before I even get in the trade, right? Okay, so Chris says, do you analyze the largest stocks in the NASDAQ or only the NQ chart? Honestly, Chris, I don't look at individual stock charts much anymore. I used to look at probably 2,000 stock charts on Sunday night and usually then about 75 to 80 throughout the week. When I was an options trader and a large cap stock trader. Now, I honestly, I couldn't tell you what Apple's price is right now, partially because I'm mainly zoned. Again, I know futures traders that do that. I don't think there's anything wrong with that. It doesn't work for me. I try to be pretty economical with my time because I'm basically a full-time trader and a part-time trading educator. I do things like this show and coaching and stuff because I really enjoy it. But this is again, I just don't really have the time to want to go through all that. And I have a decent enough track record without it that now if I ever start to kind of lose touch with the NQ, is that maybe something that I would look? Sure. I can promise you that I'm not going to be trading in 5 years like I trade now. That's just part of the markets change characteristics from time to time, and we have to adapt. All right, I want to catch up on these questions here. Over trading for a second, 200 contracts a day. Rich, that's a lot. Okay. Well, Rich, so what I always say to somebody who's failed several evals, okay, now if you fail 2, 3, 4, 5 evals when you're a newer trader, a beginning trader, that's normal. Welcome to trading, right? But if you're failing 10 evals, 15 evals, 20 evals without even passing one, what's the definition of insanity? It's doing the same thing over and over again without and expecting a different result. So if somebody comes to me and they say, I failed 20 evals, I was like, okay, I'm sorry to hear that. But what are you going to do different on number 21? Something has to change. Something has to change. And if you're over trading, honestly, there's nobody in the world can make you cut your position size down. Nobody has that power. Well, maybe a spouse, right? If you're trading real money that belongs to both of you, that's probably as close as it gets. All right. There's a lot of mental tips, mental tricks, and stuff that we can talk about. But ultimately, through all of those mental tips and tricks, you're not only over trading by position size. I think you're over trading by, 10 NQ or 10 MNQs in year 25 again. That's so honestly, if I had $25,000 of real money in an account tomorrow, okay, I'm not sure I would trade a full mini. I would probably work my way up from about 3 to 5 micros. Well, you can't make any money making 3. Well, okay, but you also can't lose nearly as much money until you kind of figure out what you're doing. Okay, 200 contracts a day. So you're telling me you're basically doing 10 MNQs. So that's 10 round trip trades. if I'm calculating that right. 200 contracts. You're not saying 200 trades. 10 round trip trades is about the maximum I would recommend for beginners. I'd prefer having them in about the 3 to 5 range, right? So in your situation, Rich, the very first thing I always tell somebody to do if they're over trading is cut your position size in half. In your case, I'd bring it down 70%. Tomorrow, I'd only trade three micros. Okay, and tell yourself once you've hit 5 trades on the day, you're done. Okay, some platforms I know, like our traders, some other ones have like lockout buttons. You can click a couple of buttons and lock yourself out for the day or for an hour or whatever. If you need to physically do that, then, or you need to physically shut down your computer, then that's what you need to do. But ultimately, Rich, nobody can take that step for you. You got to do it. So I want to hear back. I want you here tomorrow. I want to hear back from you. I want to hear that you took the position sizes no bigger than 3 micros, and I want to hear that you made no more than five trades. Deal? I'll just assume you say deal because I know some people watch this on about a 20 to 30 second delay. Okay, guys, do not even get me started on copy trading accounts. Do not get me started on those. All right, guys. So if you have any questions in the future for the mailbag, feel free to reach out to me, Trader Matt, on Discord. Also, feel free to reach out to me via email, matt@tiresiastrading.com. That's TIRESIAS trading.com. So, guys, if you struggled today, don't beat yourself up too much, okay? Half of trading, actually I would say 3/4 of trading, is recognizing what days and even segments of the day are right for your systems and your setup. I'm going to tell you guys this. You're not going to want to hear this, all right? Some newer traders think they can trade every hour of every day and everything's always going to be fine. I promise you there are certain market conditions and certain chunks of the day where your system's not going to work, no matter how good it is. And 3/4 of trading is recognizing the types of days and segments of days whose the movement is just not characteristic of a market that is conducive to your setups. Okay? That doesn't mean, you can't design setups for any kind of market trading. But my 80-20 rule is if 80% of market days are a certain way and 20% are kind of nuts like today, I'd rather design my systems for the 80% because I know those days happen more often. If those days weren't 80% days, if they were 51% days, I'd still design most of my systems for them because they happen more often. All right? It's just experience, guys. The most valuable thing for any day trader ever is just screen time. It's getting used to days, getting used to certain price movement, and just understanding when that price movement is conducive to your style of trading and your setups. All right, guys, so 2 shows down in the books for this week, 2 left to go. So, Rich, I hope to see you back tomorrow and get an update on that. Everybody else, thank you for tuning in to another edition of Beyond the Bell. Have a great rest of your day, and tomorrow's hump day. So we'll get over the hump tomorrow, and then I'll see you back here at 4 o'clock. Have a good night.